Good morning, everybody. This is Dee Dee with Power 3 Trading. Thanks for joining. I'm not here just to teach you the strat, but to teach you how to profit from the strat techniques. If you have more questions about the strat, please reach out to my guy, Rob Smith at Smith's in the Black channel, Rob in the Black on Twitter, or at cpagroup.com. So yesterday, I had some things going on, so I had my one trade of the day, my favorite trade. We mapped this out or drew our broadening formations on Tesla. I'm telling you, I can just I can just trade Tesla and be just fine and go about my business. But I do this because I want to help others find a way to either supplement their income, or if you're working full-time, or to trade full-time. One of the things I have learned over the years, so started trading full-time back in 2018 as a result of some personal things that I needed to deal with. But I can tell you, this is not an easy gig, and I made note of that yesterday. This is not an easy accomplishment, because we're having to react to the market, and a lot of times to the systems, the algos, the programs that have been created to electronically trade based on some pivots, right? Fibonacci's, headline news, and that sort of thing. And so what we try to do in trading the strat is identify those pivot areas, right? And to trade in the direction of the market, right? So understanding which way the market is going. And so broadening formations are the way to do that. And so we drew our broadening formations, and we do this every morning. Either on a 90, the 4-hour, and depending on how far we have to go back, we may do it on the daily. So yesterday we drew our broadening formations on the 90-minute. So this outside bar here, right? So this was May 31st. Okay, this was June 1st. This was May 31st. We drew our broadening formations from this 90-minute. Here, here to here, right? Then we did from 90-minute back, somewhere back here, right? This inside bar. And then we did this 2 down bar to this 2 up bar, because it's inside this range. And so basically what we were looking for, and then we did also this inside bar, because what I described yesterday is I like to see price trade below this inside bar, because we had this 2 up, 1, 2 down, but we had a 2 up day. So a little harder to see that on the daily chart, but here's what you have to understand. When price action goes 2 up, 2 up, 2 up, 2 up, forms this hanging man pattern, this is an indication of a potential reversal. And so I'd certainly be looking for price to continue to reverse today, but it could also be a 2-2 continuation. We don't know yet, right? CCI is hovering around my 0 line. So this could easily be a 2 up, 2 down, 2 up continuation. But yesterday, so which is why we like to look at these intraday ranges to figure out where we're going to enter. So this was the opening candle, 9:30. Now remember, in the way I see it, I am looking to trade this short. Now let's go back. Why am I looking for a short? I'm not looking to go long, so I'm not going to take this entry here, no matter what, because it's got to take this high of this day. This is a 2 up candle. So in my mind, I'm looking at this for a 2 down. Why? Because it was 2 up, closed red. So depending on where price opened, and it actually opened below yesterday's close, you can see that here. So it opened below yesterday's close, the prior day's close. right? So closed here. So it wasn't much, opened here, right? So you see that? So I'm looking at this and saying, I want to go short on Tesla unless it takes the high. And so I don't have clarity around that. Why? My CCI is not above 100 on the 18, and CCI is drifting below 100 on the 90. So this is indicating to me that this momentum is starting to shift. Now that's just for the day, right? We're not looking at this long term, we're day traders. So for the day, momentum is starting to shift. I want to short Tesla. So I'm not going to take this. So I don't care what's going on here. I don't care what's going on here. I'm going to say that a third time. I don't care what's going on here. Why? Because I'm looking for a short. So it opened here outside 3. And what does that mean? It's got to take the open. It's got to take the open. So when you're looking at these moves here on these shorter time frames, guys, this is just a choppy noise, which is why I wait for that 18-minute flip. And so here's what I had. It traded up. That was this move here. So the 18-minute flip went inside. It went outside. It went 2 up. Went 2 down, but barely. Looking at my 3-minute chart, guys, I want this to start to trade below 0. So no signal here. It's still above 100. Then it trades down, creates another outside bar. And I'm like, shooter, I want to trade this. So I'm waiting for this to close now. Why? Look at CCI. It's still, because this could be an inside bar here. We don't know. We don't know. So, but we have to let these bars form. Guys, we have to let these bars form, okay? And so then you had this inside bar here. So I have a 3, 1. Here's our 18-minute flip right here. Bam. Crossing back below negative 100 on a shorter time frame. I actually didn't get in right away. I like to see this because you can see how this is forming. Can't show it now, but what I was looking at was this was forming a shooter, right? You could see that on the 90-minute because of this. You had this opening range here, and right here, if you can envision, this is forming a shooter on this 90-minute candle because this is coming down, okay? And you can see that here, right? So that's half of this range. So now that's what that looked like on the 90, because this is still, not the 90 is still forming, guys. So what I did was I saw this move here, and as soon as the 90 went red, that's when I got in. I didn't take this here, but you absolutely could have taken it here. You would have gotten a better entry. I waited, I came and I waited, and I was like, ah! So I lost about $5 on that. In Tesla world, with the volatility, the implied volatility on Tesla was around 74-ish. That was great. Delta was closer to 50. Yeah, I probably lost about $250 a contract on that because I held off until I saw confirmation on this 90, then that move. But you know what, guys? This is how I stay in this game. I don't try to get greedy. I don't try to be the first one into a position. I want clarity. Once this guy started trading back below negative 100, that gave me clarity. I took my position here, held. It hit our trend line, okay? So we drew these trend lines. This was this inside bar here, hit that trend line. And I said, okay, what are we gonna do, right? This is trading down, but is it gonna hold? Trade it down, trade it up, trade it down. Now I'm looking at my 18-minute, because the way I view it, guys, is I mean, literally, I am looking at an 18-minute time frame. So you can do this on the 15 as well. And when you're trading in a volatile market like this, you have to consider you have 15 minutes or 18 minutes on every trade. Get out. I use the 90 and my 4-hour for broadening formations. I know if any of you guys watch my Benzinga video, that's because my goal is to hold positions longer, but that doesn't mean I will. That simply means in my mind, I am going to draw my broadening formation. So if price traded in the direction in which I'm expecting for the day, this is where I believe price will end up. That's not to say I'm going to buy a call or a put or short the market or buy common and hold it until it happens. That's not the way I day trade. Now, I know other people may have a different view on that, but if you're trading options, guys, because I know the way Rob teaches it, the TTO triangle layout, add. I don't trade that way, especially with volatility like we have. If you were in the sleepy market during President Obama eras, you could have just, bought common and just held it for okay, 10 years. So, but this is not that market. So you have to understand what markets you're in. You have to understand how the stocks that you're trading, how they trade. You have to understand magnitude, right? So it hits magnitude, I'm out. And so that's what happened here. And so I actually got out on this move. Here's why. So it had tapped this broadening formation, right? We drew that from this trend line here in the 90. So it tapped here, came back down. So I'm on the 18 minute, but I'm showing you guys a 15. This is at 10:30. This is your 10:30 flip, guys. It comes up, trades down, comes back up. What I saw here was, and you guys, if you've been following me, I understand candlestick patterns. This is a morning star on a 3-minute time frame. That is a reversal pattern. When I saw this come back in, I exited my position. Okay, so you want to try to train your eyes. Another way you can do that, so using your broadening formations, is once price hits. So let's look at this again. I'm on the 15-minute, guys. This, if price hits your broadening formation, so which it did right at the opening of this 15-minute, maybe you get out here, maybe you don't, but it comes back down. Trade, so that's this move here. But as soon as this turns green again, that is an indication. Why? Because you really can't see, it's not as clear on this chart here, but when I'm reviewing my patterns, once price comes up, comes back down and up again, that's an indication of a doji. It closed higher, but what that looks like before it actually closed, in my mind, the way I see it, is this would be like an inverted hammer, if you will, or a doji pattern that's starting to form, because it's already come in. That means the bulls are struggling here. Came down, bears fought back, it came back up. That's an indication for me that there's no winners or losers, just get out of the market. And then, of course, I have CCI. Okay, so let me go back to my 18-minute, but I'm always looking at that, and actually you can see it better on the 18-minute. So you see that doji looks like a little hammer, not much of a body there though. And so you're looking at that and you're saying, reversal pattern. And so as this is forming, that's what I'm looking at, okay? So I'm analyzing the chart data, guys. I'm analyzing the chart data. I'm out of this position. Okay, so it comes back up. Now, here's the other thing. Now, here, we saw this move, okay? So this was the prior day, and I entered this trade. I think we talked about that because I see my CCI crossing above 100, right? So let me just, right? And I think I told you guys, I entered here, right? Off this 2-2 move. CCI is about above 100. So again, missed this, okay with that. Make this is Tesla, guys. I can still get a $10 move here and be just fine. Limited my risk. When I hear guys saying, man, I keep getting triangled out, sometimes it's because you're anticipating a move, you jump into the position. I'm telling you, I can write a book about this because I did it. Anticipating the move, jump into the trade, only for it to triangle you out on the next candle. It happens. So here, why didn't I, what's the difference, guys? Oh, I'm already talking, I'm teaching. And this is going to be part of my course. I'm already teaching it. Somebody's got to, I mean, just watch my free videos. I'm sorry. Anyway, all right. So why did I take this position, this trade, and did not take this? Guys, it's about my CCI. This is about my CCI. I'm looking at this and saying, I don't like this. This may trade up, and guess what? I'm okay with not taking that trade. I'm okay with missing out if it goes all the way up. Because here's what I'm thinking. If it goes all the way up, there may be another opportunity, because I'm trying to trade. How do you visual? What I try to do is I try to visualize a short-term trend. Visualize a short-term trend. And if this traded all the way up here, that still doesn't give me my short-term trend, right? Because it's kind of trading back inside yesterday's time frame. So maybe this trade is over and I'm done. I'm okay with that. I'm okay with that. I got my move here. The way I had lost money in the past before I started to really read charts is I would have taken these, didn't think, thinking, okay, well, here is a morning star time frame. I would have taken this trade saying, oh yeah, no, it's going to go on a wing and a prayer. No, it's going to go. It's going to go. I'm going to hold it. It's going to go. Yeah, no, it doesn't. Here's the 90-minute flip, guys. I'm looking at this, and this is why I switched to the 90, because it gives me a better view of the daily trend. And so I look for 90-minute flips versus the 60-minute flips. Nothing wrong with 60. I just figured out how to avoid certain entries. And so, and I missed some, don't get me wrong, I would miss some on the 60 flips, but I've become, you know what, content with that. And so here's the 90-minute flip. So here's the other thing that I saw. It's like, wait a minute, this is a doji, outside doji on a 90. There's no direction here. So I'm not going to take this. But then this happened. 90-minute flip. Here's what I saw. Okay. I know I want to short this, right? Because remember, I drew my broadening formations. It's already taken out this level. Now I'm looking for it to take out this level. So those are my plans, right? So I have plans. It's already taken out that level. It came back up, triangle day out. Now it needs to come back below this level, because it's already taken it out, and then test this level. Here's what I looked for. This went the 90-minute flip. So I didn't take this here because I'd like my CCI to be back below 0. I already know I'm shorting, right? Because CCI is below -100 on 18. So don't worry about what's happening to the north side of this. I don't care. I am waiting for my entry to short this. So when this hit right at this level, guys, so it hit our trend line right here. See that? Went inside, then I took my entry. Wasn't quite below 0, came back up here, TTO. I'm okay with that, right? Because here's where I'm saying price has to, so I entered here. I'm looking at this to hold. And at the same time, I'm looking at my CCI, right? Because it's already, it opened, 18 opened way up here. This was the open. So it's red on the 18. It's got to take this out to reverse this 18-minute. not concerned. Why? CCI is below -100. Could it have gone, taken out, and come back down? I've seen it go outside only to trade back in the direction. I've seen it. If price had traded back above this inside bar, I would have just taken my loss and waited, because this is where I entered right here. I would have taken my loss and waited for another entry. I would not have gone long on this, guys. I would not have gone long. But I've seen that whole nightmare of TTO, outside bars, taking you out. It happens. Hate it, but it happens. So now I'm just holding it. I'm in the money. It retests, right? It takes this level out. It TTOs again, right? Reverses this 3. Still good. Still good. I'm watching this candle and I'm like, it's still drifting down. It's not a sharp angle, but but CCI is still drifting down. So I think I'm okay here. I'm gonna hold this. I'm gonna hold this. I'm not gonna exit right now. This is 3-minute chart. Remember, I'm on the 18. So I don't have a 2 against me. I'm okay. Then this trades down. Good, good. Comes back up. We're getting close. We're getting close. 18-minute flip is 12.12. Comes back up. Still good. Still good. Hold. Retest. So it didn't really hit my broadening formation until here, right here. Now it breaks this level. So now here's what I'm saying, guys. And you got to talk to yourself. If Tesla on this flip comes back inside this range above here, you have to exit. Take your profit. This is over, right? It's hit your target. If it's going to continue to go lower, the CCI has got to give us some signals. This next move here, guys, what did CCI do? Came up. Inside bar here on this flip, I'm out. As soon as it crossed back above here, guys, I'm out. All right. So that's how I trade. That's how I trade. That's how I trade. That's how I trade. So it is, but it took me a while to learn how to be patient, read these charts, know which way I'm going, right? Like I said, this was a 2-up bar on the daily that closed down, created a hanging man pattern. There was no, what's the word? I guess there was no alternate plan for me, I guess. I mean, I was very confident in the fact that I wanted to short. If this had traded above here, then I would have said, yeah, I'm going to go long for sure. But it didn't. It didn't. All right. So now I don't want to get stuck in here. I want to go short because this is a hanging man pattern. That is a reversal signal. Okay. There wasn't anything really, I don't know if you guys saw anything, but I didn't really have anything. Let's talk about, so I did that and then I had other stuff to do. But you can see on the daily, this was my list, but like I said, I did not trade anything else yesterday. But this was my daily list. Now let's talk about today, right? This was an outside day on the Qs. The SPY went down. It's really hard to say what's going to happen next. The Qs being an outside day. You could trade inside. CRM actually had reported the day before. They had good earnings, so they gapped up, formed this shooter. We'll see what happens with that. But let's look at the Qs and a broader market, okay? So you can see on the daily, it took that range, but it still closed right on this broadening formation that we had drawn. I think we drew this on the daily. No, this was still probably our monthly. Hang on, let me go back and see which trend line that was from. We just did a horizontal line off this inside day. So it tried to take this, come back inside this range and failed on the Qs yesterday, if you can see that. It's trading above above the close right now. You can see that at 308.07, it closed at 306. This trend line is at 305.76. So outside bar yesterday, I don't know. This could trade inside, maybe setting up for 3-1 reversal to the downside. It's inside month, guys, right? Remember yesterday started an inside month. So still very red on the quarter, last month and the quarter. Hard to say. This could go again, guys. We're dead smack in the middle of this month from the close. You see that doji on the SPY on the month. Still bright red on the quarter. So it's really that. This is one of those. Yeah, I'm not sure about the swings. I would be looking for on my strategy. I'd be looking for a pattern on my 3-day to swing weeklies, but definitely not on the monthlies, right? Because this is inside month. There is no signal here to swing this on the month. Okay. Anytime you're trading inside months, you need to wait for that month to close for potential pattern for our monthly swings. Else I would swing on weeklies. All right, so let's see if there's anything happening. My goodness, I don't, maybe Twilio, still not much of a move, 2.73%, $2.85. There's nothing going on. It's quiet today, guys. So let's go back to my, let me see what I want to look at today from a daily trade perspective, my usual suspects. Anybody on live with me have an idea of what they'd like to see, please post it in the chat. I'm just looking here to see if there's anything on my list that I'd like to trade today. Not a big fan. If the coins continue to fall, maybe look at Coinbase. Qs look like they want to open higher, but look at Coinbase. Bitcoin is lower at the open right now currently. Outside bar and Roku, I don't like that. Nvidia maybe, but we got this outside bar and the Qs. Let me look at Nvidia. See what's going on here in the broader time frame. No, that's tomorrow. Tomorrow is a new 3-day flip. Today's the 2nd. Okay. If we can get this to trade higher, there may be a potential here. We'll chart Nvidia again, guys. Inside month. Just expect choppiness. We really do have to look at these. We'll look at, let's chart Nvidia and Tesla for today. Those are my go-to stocks. But we have to expect choppiness, okay? We just have to expect choppiness. I mean, in in reality, this, guys, I don't even know what I want to say. I think it's difficult to day trade in this market, but you have to show some patience. You have to show some patience. Okay, so here's what I'm looking at, guys, because this is a 2-down bar. This was a 2 up, 2 down. If it's gonna do a continuation pattern, it's got to take obviously the high of this. So I'm just drawing this broadening formation with this inside bar, because what I'm looking for is a possibility for it to take this high outside bar and go 2 up. So I drew this broadening formation from this outside bar to this inside bar down. right? Because this was a 2 down bar. So what I'm looking for is if price can trade above this range, so basically above 773, this is 772.81, 771.98. So if it can trade above 772.81, right? I'm looking, and it's got to hold here. It's got to hold 770 though, right? So it may do it, come back in, but if it crosses up, trades up and then trades back below 70.71, then maybe potential short, but you got this outside bar to contend with. Don't like it per se. Let me see if I can get, and I'm just drawing this on the 90. This is a 2 down, this is a 2 up. If maybe if it trades below this range, but again, I don't like it. It's a 2 down, but it's got to go below this inside bar here. I don't even like what I'm drawing, to be honest with you. Excuse me. I don't like it. I don't want to trade inside this 2 down bar. It needs to trade lower. I don't like it. It needs to trade lower. Here's what I'd say. If price, because you got this inside bar here, and it trades, because it may trade low but not take this out, but may not take this out. I'm going to look at it like this. If price takes out this inside bar here, I'd look to short. So 2, 1, 2. Got another 1. Yeah, guys, I'm struggling because I don't like this range here. 2, 1, 2. Okay, so below 736. So take this out. Below this range, I'll look to go short. This would be my potential target. Not the best. Then it's got to take out this range. Yeah. All right, let me blow this up so I can see better. Okay, so envision this. You have a 2 up, 2 down. If we're going to get a 2-2 continuation, because what you have here, right, is another 2 up bar inside this range. So 2 up, 1, 2 down. If price trades below this range, so this is where I'm looking for it to break. Below this broadening formation, it's got to stay down. So if it trades below 737.21 and stays below, this is 736-ish, I'll look for short. This will be my first target. Why here? It's got to take out this day, trade below this range. Now it's inside this range, right? I could have drawn it here, but I'm going to draw it here to make this a target, right? Instead of here to make this my upper range. You actually could do it both because it's got to stay below this. But I want you to envision here for a minute that if price trades back above this range anyway, in this range, this trade is over. So even if I were to draw it this way, it's going to put us right around the same spot. So I don't need to do that. So what I'm going to do is say, if it takes out this range, because you're trading right now, you got to take out this guy and you got to take out this guy. So that's why I drew it here. It's going to be probably a bit of a challenge. All right, so now the next lowest bar inside this range, right? Because I have both of these guys right? I got to take out, I got 2 outside bars. Outside bar here, outside bar here. So the low here is 730.92, 732, okay? So that's where I am looking on the short side, and then it's got to take out this range, this guy here. So we'll draw another broadening formation here to the next lowest bar in that range, okay? So let's go back. It's got to clear this out, yesterday's low. So if price trades below 737.21, that's this 2 up bar. So I got a 2 inside bar, 2 down. It's got to take this range, the low of the day. These are my targets. I put this there because it is the low of the day. This is this broadening formation. So I'm looking for it to take this level, 728.36. This is about 731, 737. So it's not a big difference, 731 to 728.29. So a couple bucks. So that's why I put that there. So I'm really looking for it to take 729. So 2 up, 1, trade below this bar, stays below 736, target 729. Then if it breaks here and continue to trace lower, right? So you're inside this range. You can see that level there around 730. Then it's got to take this guy. So this is my short position and basically retesting 720. This low was 720.53. All right, so that's my short side of that trade. On the long side, it's got to take this guy. This will be an outside bar. This is a 2, so 3, 2 down. So I'm going to draw my broadening formation here. Yeah, because it's got to take this range. It's got to take this range, guys. You got this 2 down bar here. You got this 2 down bar. And then you're in this area here, which again is still a choppy mess. I don't know. It's a 2 down bar, so I could say, hey, if it trades above this guy here, 3, 2, 2 to the upside, but then you're going to have some resistance, right? So now this will be my target. So if we can get price to trade, I'm even going to go say above this range, which is close to yesterday's open, 755. What is this? 755.26. Open 755.05. All right, so if price trades, and I'll document this. If price trades above 755, right, then I'll look to go long. This will be my first target because it's got to clear this 2 down bar, 770, and then it's got to clear this 2 up bar. Because remember, this is a 2 up, 2 down, and we're only looking at this if we think price is a 222 continuation to the upside. Hang on one second, guys. Let me look at this on a 2-day chart. Yeah. Today is a new 2-day pattern. It's got to take, it could just sit right inside this. It's got to take this high for me to think it's going to continue to go long. Otherwise, I prefer this to be a short position. I don't even know if I want to trade this long. You see what I mean? This is a 2 down. This is a 2 up, close to the downside. Today is a new 2-day flip. 2-day flip. So what I may do on the long side, and what I mean by that is this is a 2 up candle, very similar to what we saw on the daily. Okay, so this is your day, this is your 2-day range. I like this better to the short side. So the only way, and you can tell when I'm struggling to draw my broadening formations, I don't like the trade. So the only way I will go long here is if I can see it trade above yesterday's open. So I'm going to say above, but I'm going to use this marker here, 755.26. If it trades above 755.26, then we have this potential. But because it's a 2-day down candle, it's got to take this range. Otherwise, it could sit right in here, guys, and chop you up. So you have to be careful with that. And I'm going to draw this down as well. Now, if it trades above this level here, this is this, the high of this 2-day range, then maybe we have a potential for this thing to really pop. But the market, it looks like it's a bit sleepy. There's no gapper here. Okay. Now it's just 8 o'clock, another hour and a half. We'll have to see what happens, but I'm not real comfortable. So what does that mean for me? Let's go back. I'm gonna put this on my, I'm gonna draw this on the chart. So what does that mean for me and my trading? I will do absolutely nothing in this first 18 minutes. That's how I trade normally. You know, there are occasions when I will take a trade before that. But when you're trading against time frame continuity, and in this case, you're inside this 2-day range, I do not like trading inside 2-day ranges. Tesla has been known, and let me see if I can find an example for you. When that happens, you get these short body candles like this. And let me see. 924. And when you get these short body candles, guys, like this on a Tesla, because it does not know what it wants to do and it trades in these tight ranges, you will absolutely get killed. Okay, I'm telling you from experience. If Tesla is a doji on the day and you don't see any significant moves, this is your 90 right here. This outside, and then it goes inside, and then it stays in this 90-minute range, guys. Find something else to trade. You will get hurt. I'm trying to get this down, it won't do it. But inside this range right here, you will get hurt. I actually took this, I recall, here off of this move. Then it traded down, waited for the 90-minute flip. And I think I tried to trade this and got triangled out on the shorter time frame. I'm telling you, you will get hurt trying to trade these. Yeah, right here. I did. I tried to trade this, and you can see how my CCI is. We may not get to NVIDIA, but you can see where my CCI is. Guys, you're inside this range, and these are the things that I'm really trying to teach folks how to avoid. You're inside this range. It never got out, right? So you may get a move in the first hour, and after that, it's probably over. You have to back away from those trades. And so this may be that day, okay, because of how price action is trading. It traded up, created this hammer or hanging man pattern down. Now it's inside. It actually closed inside yesterday's range. I don't like it. I don't like it, okay? And so this may be a void. This may be an avoid. So just keep that in mind. You don't have to trade every day. You don't have to trade every day, okay? All right, so I'm gonna just put some notes on here. This may be an avoid. Short below, what did we say? Below 737. And then we're gonna go, so we're gonna short below 737, and then we're gonna go long, above 7, I'm just call it 756, because the open was, this guy's high was 755.26. So I'll just go 756, because guys, it's gotta stay above this range, and this will be our first target. But this may be an avoid. If price trades inside day, avoid. We do not want to trade inside today's range. We need this guy to move. We need this guy to move. So if I get a move here on the shorter time frame, I may let me rephrase it. If it trades inside opening range, we'll say that. And my opening range is an 18-minute. Inside 18. All right. So, but that could be all day, like I showed you a minute ago. So if it's trading inside an 18-minute range, okay, let me show that again, because 18-minute range does not mean an inside bar per se. So we want to make sure we understand the difference. This is our 18-minute range. So once it went 2 down, 2 up, inside, this is the range, guys. This is what we're talking about. So, man, I got to start taking notes. I got to go rewatch all my videos and take notes. This is key. So remember, I just tried to draw this box here. Range. This is the next day. Range. Range. This is what we're talking about. Range. Not 2 down, 2 up, 2 down, 2 up on these shorter or throughout the day. Range could be in the first 18 minutes, second 18 minutes, third 18 minutes, but you have to look backwards. And this is what's getting people chopped up. What does that look like? And so you can see that on a longer time frame on this 90. You may be able to see it on the 60, but you have to see your ranges. This is 60, right? All trading inside this opening 60. If you were to take this out, you would see this clearer, right? On your 2 hour inside. Looked like there was a move here, nada. Let's take this out to the 3 hour. Inside, inside, inside. Ah, it's all inside the 3 hour. This is a new day. Outside, 2 up, inside, inside. So you have to, I'm just visualizing now on a shorter time frame. If you can't do that yet, add maybe the 2 or 3 hour time frame to your chart chart setup. So you can see this, guys. This did absolutely nothing. Absolutely nothing. But 3 hours is a long time, which is why I can now visualize here. So I'm looking at this and I'm going back, and you can even draw a box depending on your charting software. And you can draw up these boxes and say, okay, this went 2 up. Once it goes inside, then draw your box, right? So once it goes inside, then draw your box. And you can say, still inside. If that worked, if you need to do that, still inside. You're still inside that range. You're still inside. My goodness, this thing can go find something. Now you're at your 3 hour flip, right? Now you're at your 3 hour flip. Then you can just put the 3 hour candle on. It's like, I'm going to find something else to do. But if you can avoid getting chopped up in these ranges, guys, and then you get days like this, I guarantee you will not go broke. I can't guarantee you how much you're going to make. We don't talk about money here. But I can guarantee you will not go broke, because now what you have done is minimize your risk and maximize your profits. You can do that on every trade, and just don't trade choppy markets. And when you see those simultaneous breaks on the outside, I'm sorry, on the Qs and the SPY, just trade those days. I'm like, well, let's move in. Go make my money, right? All right, guys, we're not gonna have time to get to NVIDIA. I'm so sorry, I get to talking. I got a lot in my head. I can, like I said, the nuances, the aha moments that I've had over my career that I'm gonna share, but I'm gonna wrap it up because this video is way too long with my favorite script. So Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. Guys, if you can take your time and trade this market with a great deal of patience, you will find some success. Okay? All right, appreciate everybody joining me. Take good care, everybody.